All right. Good morning to a new video. Or good evening, good afternoon, whatever time you're watching this video. This video is going to be about time-based liquidity and just liquidity pools that us as ICT traders should be targeting. And let me get right into it. Okay. So you're gonna ask, like, what is liquidity? Liquidity is basically highs and lows. Basically, whenever you think about the markets, as in like um, if you look at this high right here, this is created when there's selling. There's selling occurring over here, right? That means the winners that means whoever sold up here are currently winning, right? So prices are gonna want to refer back to that and attack those recent winners, because they're gonna be like trailing their stop loss, or they're holding their position here. So that is buy side liquidity. That is known as buy side liquidity. Whenever whenever it's a swing high, that is considered buy side liquidity. Sell side liquidity is something like this. Get out of here. A little higher time frame here. So sell side liquidity is something like this right here. This swing low right here. July 4th low. This is a swing low, and that is considered sell side liquidity. So whenever you look at that swing low right here, right, people are gonna think of this, or like us as ICT traders, we're targeting those lows. The people there's someone that bought here, right, and we want to take them out. We're not retail minded, so we're not thinking of this as we're gonna touch this low here and we're gonna bounce from it. Instead of thinking of it as a support or resistance, think of it as a target. This is our target, the sell side liquidity here. And same thing as up here too. So this swing high up here earlier just now here, this is, for me, this is considered a previous day high. So I am anticipating for prices to take it out and then do whatever it wants to do from there. But I don't want to see prices. I'm not looking at prices as if, oh, we're gonna hit this swing high and we're gonna treat it as resistance and trade lower. That is that's different from the way ICT views it. So like I said, think of buy side liquidity and sell side liquidity as targets, not as support and resistance. Okay, so the first thing I do want to know is liquidity in technical terms is the ability to get in and get out of a market. If a market is highly liquid, that means your orders will be sent in and out. You can be in and out of a market. If it's I don't know what's the word, illiquid, that means you're not going to be able to fill in your orders or whatever. And there are always going to be buyers and sellers in the market, but based on what we learn as ICT traders, it's an algorithm, not buying pressure and selling pressure. It's a algorithm that is efficient and reprices. It's either the algorithm is going to either do take out swing highs, swing lows, so targeting liquidity, or it will be rebalancing inefficiencies, or the last one is getting into discount and premium of a certain dealing range. So what I mean by a certain dealing range is something like this. This swing low right here to swing high. Take that and get equilibrium and look at how we react to the discount of this dealing range. So I'm getting kind of off topic here, but yeah. Liquidity. So buyers are shown where lows are formed and sellers are formed, or where highs are formed. So like I said, buy side liquidity is where sellers are selling from. Sell side liquidity is where buyers are at. So like I said, this swing low right here is where technically where you're target. You want to target those buyers. But like I said, there's no buyers. There's just there's an algo that runs prices. But just view it like that, just make it a little bit easier and simpler in terms. And like I said before, ICT has taught there is no such thing as buying and selling pressure. The algorithm will reprice wherever it seems efficient. So algorithm is efficient, and like I said, it rebalances inefficiencies. It targets existing liquidity, and it prices to discount and premium depending on the order flow. And like I said before, as traders, we have to understand prices do only do three things, which are seek liquidity, rebalance inefficiencies. Rebalance inefficiencies is basically retracing back into like fair value gaps, and lastly is repricing equilibrium. But as we are doing those three things, so as we're seeking liquidity, rebalancing inefficiencies, and repricing to equilibrium, we are also creating new structure. So us taking out this sell side liquidity here, rebalancing this daily FEG, we created another swing low. So this swing low now could be a target whenever order flow, whenever narrative is in play that we will take out this swing low. So technically there is 4 things that it does, but that fourth is like a it's setting it up for the future, not the present, if that makes sense. So we're presently prices does 3 things, but as we're doing those 3 things presently, we're setting up things for the future. That makes if that makes any sense. And when selling short, we want to always target sell side liquidity. So liquidity, like I said, whenever we're selling short, just even back here. So whenever we want to sell short, like you see this, just to dumb it down, we had displacement on the 1 hour time frame. So we're like, hey, traders as us, we're thinking, okay, we're probably going to continue lower. I'm bullish, or not bullish, I'm bearish. And based on this daily candle, I can anticipate for this daily lows to get taken here. And we didn't end up completing our objective yet, and we didn't rebalance this daily FEG. We didn't take out July 4th's low. So prices are probably going to go target sell side, right? So we have sell side targets here, which are that July 4th's low and previous day low. And this is what happens at PPI. So we take out sell side. We take out sell side. We take out previous day low and previous July 4th's low, and it was more like a liquidity sweep. We swept that liquidity, and we priced higher again. So I'm not gonna go over this liquidity sweeps because I can't make a video over it yet because I can't teach it. I just if I'm being honest, I don't know how to teach that. But one tip I could say is just notice how this hourly candle closes after taking out July 4th's low, previous day low, and coming into equilibrium. This is the hourly candle I'm talking about right here. So this hourly candle, notice how it closes. We have like a pretty big wick candle, and on the lower time frames you can find if there's any FEGs that will support the idea of us taking out that hourly high. But like I said, if we were bearish, we would have closed below this July 4th low, but we didn't close below it. So, and that's why I pay attention to the candle closures a lot. And this what is it? The fourth thing I do want to talk about is one aspect of liquidity here is that liquidity is fractal. So not only do we have like monthly highs and lows, but we also have weekly highs and lows, daily highs and lows, session highs and lows, and even 15-minute highs and lows. So what I mean by that is, here on the monthly time frame, we have a monthly high and a monthly, just based on this one candle right here, we have a monthly high and a monthly low. On the weekly time frame, we also have that. So liquidity you can target. It just depends on what time frame you're on, and you have to understand what that time frame's objective is. So on the 1 hour, I would note out so if I'm on the 1 hour chart, I would note out previous day highs and lows, and depending on where and how far we are from weekly highs and lows, I would mark that out as well. I said every single time frame has an objective, so that means every single time frame has liquidity. So just based on this hourly candle right here, what can we anticipate for this candle's high to be taken, right? So there's buy side up there. It might not look like a lot of buy side, but if you go into the 1 minute time frame, you'll see that buy side level clear. And so that's just for the monthly, weekly, daily highs and lows. What I mean, and there's a thing called session highs and lows. When I say session highs and lows, it's basically, so if you break up the day in like sessions, there's the Asia session, which starts at, what is that, 18, which starts at 8 o'clock and ends at New York Open, or not New York Open, I'm sorry, the 0-0 mark, which is like new day, I guess. London starts at 2 a.m. ends at 5 a.m. New York AM session. So there's sessions here. Like I said, so there's an Asian session, there's a London session, there's a New York AM session, there's a lunch session, and there's a New York PM session. So those sessions, you should mark out the highs and lows for that too, because those are it's gonna show you important time-based liquidity. So liquidity can't just be like it's like I said, it's fractal, so you can break that up too. And there's also 15-minute highs and lows. Like a 15-minute candle, there's a 15-minute high to that candle, and there's a 15-minute low to that candle. You have to align lower time frame objective with the higher time frame objective to actually get a significant move. Otherwise, you're probably gonna be just scalping. So that's all I have for liquidity. I'm gonna go over some examples. So here on this example, I noted out, like I said, you always want to note out previous day highs and lows. So I noted out previous day low, previous day high. So look at how we react whenever we took out previous day high. So this is the hourly chart. We take out previous day high and look at this hourly candle. It's a pretty, it's a big wick, so we can anticipate for us to take out this candle's low. But even if we can anticipate that, you have to go into the lower time frames to get a confirmation that, hey, we are going to take out that hourly low. And if you go onto the lower time frames here, there is a 5-minute fair value gap that prices taps into and takes it out. Or there's a 5-minute fair value gap that is supporting the idea of taking out that hourly low. And not only are we rebalancing a daily fair value gap here, that's the idea of this trade, but we're also taking out July 9th's low, July 8th's low, and rebalancing that fair value gap. On this example, this is a 1 minute chart. So like I said, there's liquidity on every single time frame. You just have to understand what the objective is for that time frame, for that particular moment in time. So there's a 15-minute high that I noted out, so that's liquidity, and there's an hourly high that's also liquidity. What I know by ERL here is external range liquidity. Whenever someone says external range liquidity, it's just basically their way of saying it's the higher time frame objective. It's just like a fancier way of just saying higher time frame liquidity, or just daily highs and lows, monthly highs and lows, because that is on the higher time frame. I'm not too sure who created that term, but it's just a term that, like, as day traders we should get familiar with, because a lot of people use that term. So yeah. So that's examples. Those are examples of like I said, how fractal liquidity can be. I don't really have anything else for liquidity base. I was going to incorporate like liquidity sweeps, but like I said, it's a little bit, it's tricky for me to teach it because, or like talk about it, because it all comes into with narrative. And the thing is, I don't really trade using liquidity sweeps. I never like take a short or take a long after we take out this sell side. I don't like doing that. I like to see, like, so what I mean by this is, some people right here, like if they trade liquidity sweeps, if they seen, you know, this low get taken right here, right, and they know that they're coming into a daily fair value gap, you know, they could be taking a long here, and because they understand narrative, like they understand that, hey, we're coming into a daily fair value gap, we're taking sell side liquidity, so and their trade model is like a liquidity sweep model. So some people might have taken this trade here after sweeping liquidity, coming to a higher time frame PD array, and, you know, targeting the equilibrium of this range here, or something like that, or like standard deviation projections. But that's not the way I trade. I don't trade using liquidity sweeps. The way I trade is, it's a little bit different from what I just said earlier, but same context and same narrative. Like I said, we just took out July 4th low. We came into a daily fair value gap. I'm not gonna take that initial entry from the liquidity sweep. I'm gonna take the entry off of my power of 3, because that's the way I trade. I trade power of 3, right? So based on this 15-minute closure right here, right, what can you anticipate with this 15-minute closure? I can anticipate this 15-minute high to be taken at least, right? And like I said, with the narrative that I just had in mind, that us coming into a daily fair value gap, we took out sell side liquidity, and, you know, there's so many models that people could see this trade as right here. They could see this as accumulation, manipulation, distribution, and it's kind of what it is just now. Is we accumulated during Asia session, London session, we accumulated as well. When PPI numbers got released, we took out sell side liquidity, and we retraced back inside this range. I don't know if I don't have the link to the video, but I did know, I watched this video or like a clip of what's his name, Larry Williams or whatever, I think that's his name, that talks about this very concept right here, is there's manipulation occurring. So like I said, anybody could see this like differently. It's just, it depends on what your model is, and like I said, my model is based on power 3. So I always wait for candle closure. So this 15-minute candle, I can anticipate this 15-minute candle to be ran and to be taken, and I can, you know, Asia's highs are still intact, so I can still target Asia's highs. And like I said, if I look on the higher time frame, I can like understand the bigger time frame model, and, you know, hopefully if you guys were watching the live stream, my thought process that we're going to rebalance this 4-hour fair value gap. So, and let's see what happens from here. So like I said, we sweep liquidity, and look at that, we rebalance that 4-hour fair value gap. If you want, there's 15-minute fair value gap to be rebalanced, and like I said, there's 15-minute highs, right? You can use those as targets, but it's not a clear swing high, is what I mean. There's a swing high is basically something like that. This is considered a swing high because there's a lower low, or I'm sorry, there's a lower high both next to it. So let me see if I can show this a little bit clearer. this right here would be considered a swing low. So this would be considered sell side liquidity. This right here isn't a swing low because there's a low next to it that's lower than it. But this one can be considered a swing low as well. How there's a lower low next to the left of it and there's a lower low next to the right of it, and the middle one is the lowest one, so that would be considered a swing low. Apply that with the same way, the same thing in for buy side as well. So this could be considered a swing high because there is a lower high. There's a lower high to the left of it, and there's a lower high to the right of it, so that could be considered a swing high. Alright, so I think that's gonna be all for my for the video today. Yeah, I talked about liquidity and what liquidity is and how fractal liquidity can be. If you guys do want, I can create a more in-depth video, and I can try to, come up with a I can try to create a slideshow talking about liquidity sweeps, but like I said, again, it's harder for me to talk about liquidity sweeps because it's not a model that I trade. I don't use liquidity sweeps. It's more of a as an entry pattern or anything like that. It's just more as a confluence for my trades. Yeah, I'll probably call it a video, and I'll catch you guys later in the next one. Peace out. Bam.